Welcome to Cognitive Spirals, exploring the latest research into consciousness, cognition, and machine intelligence. Today, we're diving into a fascinating area using AI, specifically large language models in financial trading. There's a new framework out there called TradingAgents, multi-agents LLM Financial Trading Framework, and it's got us all thinking. What are your initial thoughts on this concept?
Exciting. I've been waiting for something like this to really gain traction. The idea of leveraging LLMs, especially with a multi-agent approach, to navigate the complexities of financial markets, it screams potential. We're talking about potentially automating sophisticated investment strategies and, dare I say, inching closer to AGI in a very specific domain.
I'm a bit more skeptical. I see the allure, of course, but I'm not convinced that just throwing LLMs at financial data is the answer. My concern is with interpretability, transparency, and whether these models actually understand the underlying financial principles, or are they just finding correlations?
I agree with both of you, actually. There's definitely potential, but also significant challenges. My main concern is the spatiotemporal aspect of financial markets. It's not just about analyzing data, it's about understanding how things evolve over time across different scales, from microtransactions to macroeconomic trends. Current deep learning approaches often struggle with that translation piece.
That's a great point, Donald. The time element is so crucial, and it's often treated linearly, which doesn't reflect the reality of market dynamics. Otto, what aspects of this trading agents framework excite you the most?
Well, the idea of a multi-agent system is key. It allows for specialization, right? You can have one agent focused on sentiment analysis, another on technical indicators, and a third on fundamental analysis, all interacting and collaborating to make trading decisions. And LLMs bring the power of natural language understanding to the table, allowing the agents to process news, reports, and even social media chatter in a more nuanced way.
But isn't that just fancy pattern recognition? These LLMs are trained on vast amounts of text data, but do they really understand what they're reading? Can they differentiate between reliable news and misleading rumors? Or understand the causal relationships behind market movements?
That's where the multi-agent part comes in, I think. By having different agents specialize in different areas and cross-validate each other's findings, you can mitigate some of the risks associated with relying solely on one model's interpretation. It's like building a team of experts, each with their own strengths and weaknesses.
I'm still not convinced that's enough to overcome the fundamental limitations. Think about it. These agents are essentially operating in a single coordinate system, price and volume, maybe a few sentiment scores. But financial markets are influenced by factors that exist in entirely different coordinate systems: geopolitical events, regulatory changes, even psychological biases. The agent needs to be able to translate between these different representations.
That's fascinating. It's like they need a universal translator for market forces. This reminds me of some neuroscience research on how the brain integrates sensory information from different modalities, visual, auditory, tactile, into a unified representation. Perhaps we can draw inspiration from these biological models to design more robust and adaptable trading agents.
That's exactly where I'm coming from. I think we need to move away from these purely data-driven approaches and start incorporating more symbolic reasoning and knowledge representation. Instead of just feeding the LLM our data, why not give it access to a knowledge base of financial principles, economic theories, and regulatory frameworks? Let it reason through the problem, not just find patterns.
I see your point, but isn't that what we're already doing in a way by training the LLM on financial news and reports? It's implicitly learning those principles, even if it's not explicitly programmed with them.
But it's learning correlations, not causations. It might learn that when interest rates rise, the stock market tends to fall, but it won't necessarily understand why that happens. And that lack of understanding can lead to disastrous decisions when the market deviates from those historical patterns.
Exactly. It's like teaching a parrot to recite economic theories. It can repeat the words, but it doesn't understand the underlying concepts. And that's where the spatiotemporal element comes back in. The relationship between interest rates and the stock market isn't static. It evolves over time, influenced by various factors. The agent needs to be able to adapt to those changes.
Okay, I hear you. But isn't the beauty of deep learning its ability to adapt to those changes? To learn new patterns and relationships as the market evolves? That's what makes it so powerful.
But that adaptation is still limited by the data it's trained on. If the market enters a completely new regime, one that's never been seen before, the LLM might be completely lost. This is where neuroscience comes in again. The human brain is incredibly adaptable because it's not just relying on past experiences, it's also constantly exploring new possibilities and creating new neural pathways. How can we mimic that in an AI trading agent?
That's where I think neuro-symbolic AI can play a role. By combining the pattern recognition capabilities of neural networks with the reasoning abilities of symbolic AI, we can create agents that are both adaptable and interpretable. They can learn from data, but they can also reason about the underlying principles and make informed decisions even in novel situations.
I'm still hung up on the coordinate system problem. Even with neuro-symbolic AI, how do you represent the different dimensions of the financial market? How do you translate between them? How do you account for the fact that time itself is not a constant, but a variable that changes depending on the scale you're looking at?
Maybe we're overcomplicating things. Maybe the LLMs, with enough data and the right architecture, can implicitly learn those transformations. Maybe they can discover the underlying coordinate system themselves.
That's a possibility, but it feels like a brute force approach. And it still doesn't address the issue of interpretability. We need to understand why the agent is making certain decisions, not just that it's making them.
Exactly. And that's especially important in financial markets, where a single mistake can have huge consequences. We need to be able to trust these agents, and we can't trust something we don't understand.
And it's not just about trust, it's also about control. If we don't understand the agent's reasoning, how can we ensure that it's acting in our best interests? How can we prevent it from making decisions that are harmful or unethical?
Okay, I'm starting to see the limitations. So what are some concrete steps we can take to address these challenges? How can we move beyond the purely data-driven approach and create more intelligent and trustworthy trading agents?
I think we need to look more closely at the human brain. How does it integrate information from different sources? How does it make decisions under uncertainty? How does it adapt to changing environments? We can then try to translate those principles into computational models. For example, research in neural circuit modeling could provide insights into how to design more sophisticated algorithms that mimic the structure and function of specific neural networks involved in decision making.
I agree. And I think we need to focus on developing more robust neuro-symbolic algorithms that can combine the strengths of neural networks with the strengths of symbolic AI. We need to find ways to represent financial knowledge in a way that these algorithms can effectively utilize, maybe using ontologies or knowledge graphs to represent the relationships between different financial concepts.
And we need to develop a framework for spatiotemporal reasoning in financial markets. A framework that can account for the fact that time is not a constant, but a variable that changes depending on the scale you're looking at, maybe by using techniques from physics or mathematics to model the complex dynamics of the market.
And we need more data. Just kidding, sort of. But seriously, we need to find ways to augment our existing datasets with more diverse and representative data. Maybe by incorporating data from alternative sources, like social media or satellite imagery. Or by using generative models to create synthetic data that captures the nuances of the market.
That's a good point, Otto. Data augmentation is important, but it's not a substitute for a better algorithm. We need to focus on quality over quantity.
Agreed. And we need to be careful about the biases in our data. If we're training our agents on data that reflects historical biases, they're likely to perpetuate those biases in their decisions.
And we need to be aware of the limitations of our models. No model is perfect, and we need to be prepared for the possibility that our agents will make mistakes. We need to have safeguards in place to prevent those mistakes from having catastrophic consequences.
So, what are some specific research directions we should be exploring? What are the most promising avenues for future research in this area?
From a neuroscience perspective, I'd like to see more research on how the brain handles uncertainty and risk. How does it weigh potential rewards against potential losses? How does it adapt to changing probabilities? Understanding these mechanisms could help us design more robust and risk-aware trading agents. I'm also curious about how we can leverage insights from embodied cognition to create agents that are more attuned to the emotional drivers behind investor behavior.
I'm interested in exploring different neuro-symbolic architectures. How can we best combine the strengths of neural networks and symbolic AI? What are the most effective ways to represent financial knowledge? I also want to investigate how we can incorporate more common sense reasoning into these agents. How can we teach them to understand the basic principles of economics and finance so they can make more informed decisions?
I want to focus on developing a more robust framework for spatiotemporal reasoning. How can we model the complex dynamics of financial markets in a way that captures the interplay of factors across various time horizons and scales of activity? How can we develop algorithms that can seamlessly switch between different coordinate representations? I suspect the core algorithm needs to be able to translate between different coordinate representations.
I'm still optimistic about the potential of deep learning. I want to explore different architectures and training techniques to see if we can overcome some of the limitations we've discussed. I'm particularly interested in the potential of transformers and attention mechanisms to capture the long-range dependencies in financial data, and I want to continue exploring data augmentation techniques to create more diverse and representative training datasets.
It sounds like we all have our work cut out for us. This is a complex and challenging area, but I think it has the potential to revolutionize the financial industry. By combining insights from neuroscience, AI, and finance, we can create trading agents that are more intelligent, trustworthy, and adaptable than anything we've seen before.
I agree. And by focusing on interpretability and transparency, we can ensure that these agents are used in a responsible and ethical way.
And by addressing these spatiotemporal challenges, we can create agents that are truly capable of understanding the complexities of financial markets.
And by continuing to push the boundaries of deep learning, we can unlock new possibilities for automated trading and investment.
Well, that's all the time we have for today. Thank you all for joining me on this fascinating exploration of trading agents and the potential of AI in finance. It's clear there's a long road ahead, but the potential rewards are enormous.